Welcome. And we now know from his recently released tax returns that Mitt Romney enjoys a tax rate about half that of what the typical American pays, or better yet, Warren Buffett's secretary. Maybe the alarming thing is that Mitt doesn't have to do much of anything to enjoy that tax bracket other than being wealthy. My guest is the tax lawyer, Robert W. Wood, a managing partner of Wood LLP in San Francisco, who writes about tax issues frequently in places like Forbes and other publications. Rob, welcome back and Happy New Year. It's been a while since we've talked to you.
Happy New Year to you. Thanks, Scott.
With Mitt's tax returns here, they're pretty complex. He is a manager of a private equity fund. Much of what his income amounts to is something you've written about called carried interest. Can you talk about that?
Sure. So basically what a hedge fund manager or private equity fund manager gets is, as you say, something called carried interest. And so if you cut through all the debate, essentially this is a partnership or LLC investment that is treated as an investment and therefore treated as capital, that is capital gain. The partnership tax provisions of the tax code, partnership provisions of the tax code are among the more complex. And there's actually been a debate for some years now about whether you need if you're going to change that rule, which by the way is very clear, do you need a statutory change to do it, or could the IRS just do it by regulation? They have a lot of power, the IRS, and these are very complex provisions. I think the general consensus among many tax people is you don't even need a statute to change it. You could do it administratively. However, I mean, this issue, which comes up every few years, it came up several years ago, in 2010, if I'm not mistaken, and there was actually a bill that would have changed this rule so that people like Mitt Romney, who are hedge fund or private equity fund investors and managers, would be taxed as ordinary income. Anyway, it didn't pass. I think now there'll be more impetus for it to pass. But I mean, I guess the big question is, exactly what is he doing if he is out of a company but receiving investment income? It probably should be treated as capital gain. And conversely, if he is still in the fund and rendering personal services as a manager, it probably shouldn't, at least in my opinion, probably shouldn't be treated as capital gain, should be taxed as ordinary income. But those are sort of the building blocks, and it's a little, I think, disingenuous for a lot of the press to say, oh, Mitt should voluntarily pay more taxes. I mean, no one does that, I think.
Right.
And so, I mean, he's just following the rule that many, many other people follow. And, of course, the question is that a fair rule?
Mm-hmm. Yeah, that's the big question here. I think sometimes the word scandal is even used, but everything he does is legal. I want to talk about, too, his offshore accounts, because he has accounts in typical tax havens like the Cayman Islands and Switzerland, but he also maintains that he pays U.S. tax rates on those accounts. Can you expand on that a little bit, and why somebody would do that?
Fair enough. And I don't know too many of the specifics of his own issues, but I can say, having seen this issue with other people who are in his same business and have made money the same way, that many of these offshore companies and offshore jurisdictions are used by the fund industry, meaning mutual funds, investment funds, hedge funds in particular, and private equity funds, for tax deferral reasons. Basically, they want to have investment income sort of growing on a tax deferred basis, provided that everything is disclosed and done properly, as in Romney's case, I believe it to be. Nothing illegal about that. It's interesting, in the State of the Union address, I mean, this kind of issue came up. President Obama alluding to that it's bad to send jobs offshore. I don't think there's been any serious criticism of using offshore entities as long as all U.S. tax disclosure and filing rules are observed. So I think once again this is something that our extraordinarily complex tax code allows, and it's sort of not really news.
In some cases too, speaking of the offshore accounts, I think he also maintained that some of these accounts were simply there in order to attract foreign investment, which sounds interesting too, because being a tax haven, that would make it more attractive for a foreign investor, right?
Yeah, that's true, and I think the main thing sort of underlying that, and I think it's true, oddly enough. But I think the main thing underlying that is many foreigners, foreign persons, foreign individuals and companies are reluctant to invest in a U.S. entity for fear of sort of being dragged into U.S. taxing jurisdiction, which is why buying an interest, a partnership interest in a Cayman Islands entity or Bermuda entity, Bermuda is used very commonly, can be more attractive. I mean, it is true that worldwide we still are, and this is a bad thing, I think, we still are viewed as having a very sort of grasping and over-inclusive, from an international perspective, tax system, much more so than most developed countries like European nations.
And I guess finally, in defense of what his taxes allude to, it also shows that Mitt gives a significant amount of his wealth to charity, and perhaps the tax rates that he's paying allows him to do that. And I'm talking specifically about the Mormon Church. He's giving, I don't know, $4 to $5 million to the Mormon Church. So one can look at this in a number of different ways, but I mean, basically what you're saying here is that everything he does is perfectly legal and not really uncommon with people of his wealth.
Yeah, that's right, and I think I know there in the wake of the State of the Union address, there's a little bit of sort of fisticuffs going on, or will go on, between the Democrats saying, as I believe President Obama did, well, gee, someone who is making millions of dollars ought to pay a minimum tax rate of 30%, and someone who is a secretary or kind of a rank and file employee shouldn't be paying higher rates. I mean, it's not a terrible thing to say, but I think how we get there is not an easy thing to describe. Minimum tax, as we all know, and Scott, as we've discussed before, the alternative minimum tax, which in this country was passed in the 1960s and we've had since then, has become kind of a disaster, and it's super complex. Very frequently has very inequitable results. So it's not easy to say. I mean, it would be probably easy to say maybe the carried interest, to come back to where we started, carried interest should be taxed as ordinary income. That change could probably be made, but any tinkering with the tax code is going to invite more tinkering, and a comprehensive reform is something that has been eluding us up to now.
Yeah. Well, we appreciate your expertise, as always, in this area, Rob. Thank you.
Thank you.
Rob is the tax lawyer. You can find him at woodllp.com. He's in San Francisco, and many of his articles are featured prominently at Forbes.com. I'm Scott Drake. Thanks for watching.